Well, good evening, everyone. Welcome back to the channel. So we're going to deviate a bit from the regularly scheduled yield max programming, and we're going to discuss some frequently talked about and requested growth ETFs. So the first one that we're actually going to go over is called Moat, and hopefully when I deliver my cutting edge analysis to you all, we'll be able to determine whether or not this will be able to help us create a financial moat in our portfolios. So let's go and check out this first one. And we're probably going to look at about 5 of them or more, depending on, how things flow here, how much participation we get. So the Moat fund is actually the Van Eck Morningstar Wide Moat ETF, like Warren Buffett talks about creating good moats for your balance sheet, your portfolio, so on and so forth, something along those lines, right? So, okay, now let me share the screen here and let's go check out Moat. Okay, so the first thing that pops out at me is, of course, the ticker symbol, which we pointed that out, MOAT, which spells Moat. And we've got, okay, from May 2012, we've got, this one has 4x in value, and dividend people. It also pays a dividend, not a yield max dividend, but we might call this one a yield min because it's like a very minimal. But anyway, we've 4x since May 2012. And this one looks like, if you were to draw a trend line, this one looks like it's like a trajectory pretty much consistently upward, not rapidly moving upward, but pretty consistently upward. The only bump in the road kind of up and down that we've leveled out from obviously was the pandemic. But literally, if you could zoom out on that, you could just pretty much have like a straight trend line up. So NAV, it's actually right in line with its NAV. It pays a yield, slightly down for the year, not too risky overall, given the beta of 1.02 compared to the market. And then let's see, what is this one? So the top holdings for this one are Salesforce, CRM, by the way. So Salesforce had a great day today, so that should bode well for this one. Allegion, Equifax, US Bank Corp, Wells Fargo, Masco, RTX, Keysight Technologies. That's actually a stock I hold in an account. Alphabet, Intercontinental Exchange, ticker symbol ICE. Fund summary. The fund normally invests at least 80% of its total assets in securities that comprise the fund's benchmark index. What is the fund's benchmark index, though? The index is comprised of securities issued by companies that Morningstar Inc. determines to have sustainable competitive advantages based on a proprietary methodology that considers quantitative and qualitative factors. Wide moat companies. I actually like the objective of this fund. I actually really like it. This seems like a pretty solid one. So this is a good find. Let's see, what else can we find here? I like this one. I'd have to give this one a good solid B plus. Let's see here. Oh, we got a couple of you. We got one comment so far. I'll get to the comments at the end. I try not to distract from the overall video. Let's see, what were the other ones that, let's see. Okay, the other two, the next two we're going to look at are going to be, I believe this is a ticker symbol here, MJK, and then IHI. So MJK is short for magic, right? Vanguard Mega Cap Growth Index Fund. I like Mega Cap a lot. So this one, by the way, the expense ratio is virtually nothing. It's 0.07. So, and I know some of you don't care about expense ratios. Some of you actually like really high ones. Like there was one, the yield max one for the YMAX fund, and the YMAG is 1.29%. I pointed that out, and some of you kind of jumped me for, even mentioning that it was higher. Like that was supposed to be just amazing, I guess, and maybe they should charge 2%. But this was like 0.07. It's one of the lowest ones I've seen before. So, from February of '08, this one has done very well. We were at $45 here. You can see the pullback that we had in the financial crash. So since our lows, when we hit like our March 2009 lows, this one has actually 10x'd. So really solid. And mega cap is a great asset class to be invested in, I would say. NAV, these Vanguard funds do great. The NAV is like right along the lines of, excuse me, what I would consider fair value. NAV, it's slightly over NAV. We like to see that. We're not too familiar with that with yield max funds, but obviously this is different. Here's some other Vanguard ones: the VUG, the VOTE, the MGV, the MGC, and the VONG. Oh, Russell 1000. How about that? The top holdings for the mega cap are basically the former FANG stocks or the Magnificent Seven, which we hope stay magnificent. We've got Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta, Tesla. Oh, how about this one? It has the A shares and the C shares of Alphabet. Now, for those unfamiliar, when they split, I want to say in 2014, they created A shares and C shares, and one was never supposed to trade higher than the other one, or they were supposed to issue some sort of compensation for that. Whether or not that ever happened, I don't know. And then it's Visa, Eli Lilly. So those are like the top 10 holdings there. The objective of this fund, the fund employs an indexing investment approach designed to track the performance of the index. The index is a float-adjusted, market capitalization weighted index designed to measure equity market performance of mega cap growth stocks in the United States. The advisor, oh, there's an advisor, huh? Not sure, we have kind of mixed feelings about them. The advisor attempts to replicate the target index by investing all or substantially all of its assets in the stocks that make up the index, holding each stock in approximately the same proportion as its weighting in the index. The fund is non-diversified. Interesting. No, I mean, like I said, mega cap, any mega cap fund I like. And it's not just limited to Vanguard. I mean, really any mega cap fund. Like my first 401k was all in like JP Morgan funds. And like those are all kicking butt for sure. I mean, index investing really is amazing. And as far as the yield, this one does pay a dividend, by the way, dividend people, 0.49%. So nowhere near yield max, but still really solid. And then the other one that I mentioned that I was going to talk about, I've already forgotten. So I got to go look at it again. And then what we're going to do, there's going to be two other ones that I'm going to throw in to the mix here after this one. Okay, so we just looked at MJK, so we're going to look at this IHI. I may actually double the list. I may add three more. IHI is iShares US Medical Devices ETF. That's interesting. 5693. This is iShares. Okay. A dividend of 0.51%. It's positive year to date. Slightly under the NAV, but not too bad. Since 06, this one has done incredibly. We've like literally 8x'd in this one, 781 to 5693, very close to an 8x. We've pulled back a little bit from the 2021 highs, but you see where we are here at 5693, 5717 in the after hours. PE ratio looks a little high. Beta is right in line with the market, but the expense ratio is higher, the 0.4%. I honestly don't know if anybody really cares about expense ratio, honestly, because it's one of those costs that we never see. It's just like anything, when you buy stuff, if they don't give you a receipt, it's like it never happens. Like you just close your eyes, take out your credit card, and, and then there you go. They took your money. That's kind of what they do with expense ratio, I feel like. So anyway, all right, the coach is going to call a couple of audibles here, and we're going to look at, since we like Vanguard so much, we're going to look at VT and VTI. I don't think I've ever mentioned these on this channel, but there's a first time for everything, right? So let me see how we're doing here. Okay, we got, just 2 comments. The cat's got your tongue tonight. Okay, so in the VT, 105.12, this is the total world index fund. So this is like broader than just the United States. You're getting like global exposure here. It pays a 2.08% dividend, which is better than some of the others. It's right in line with the NAV. Since '08, we have doubled in value. So all in all, if you bought in like 22, you're actually probably up in this one. That's a good sign. And literally, this is in the total world. As far as top holdings, it's got some of the same names. We keep seeing some of the same names over and over again. Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta, both. It's weird. It has both shares of Google. Tesla, there's some Tesla there. Berkshire Hathaway and Eli Lilly. The fund summary. The fund employs an indexing investment approach designed to track the performance of the FTSE Global All Cap Index. The advisor attempts to sample the target index by investing all or substantially all of its assets in common stocks in the index and by holding a representative sample of securities that resembles the full index in terms of key risk factors and other characteristics. Well, there we go. I just got my reading in for the day. So you knock out two birds in one stone with these videos. Okay, so now what I want to do is look up the FTSE Global All Cap Index. I feel like when I read all cap, I should like capitalize, put the caps lock on the keyboard, right? Okay, this is Vanguard FT. This might be a fund for this one. It looks like the Toronto Exchange. I just want to look at this because I'm actually kind of intrigued here. Like, I want to know what other like non-US companies are included in this. But this may be research for another time. Anyway, so the FTSE Global All Cap Index is a thing, is such a thing. The other one I want to look at, VTI, Vanguard Total Stock Market Index Fund, 247.39. It's just about pretty much in line with the NAV, which you're noticing these funds that don't pay huge dividends are pretty much staying consistent with the NAV. So I would consider these funds like an alternative to yield max. And again, if you all tracked with the coach's portfolio, the bulk of my portfolio, I am majority index investor. Real estate and index funds are the bulk of my net worth, actually, aside from advanced financial forecasting equipment and colorful hats. So yeah, index funds, like the yield max stuff, that's all in the 10% bucket over here, the kind of like speculative playing stuff. I don't want to lose that, but it's the part that I can be more risky with. And I would never like put my whole 401k in yield max, of course. Don't tell some of these others that I said that. I mean, you can tell Jay understands, like, that doesn't mean like if I was to say that to Jay, it doesn't mean that I'm not like a yield max cheerleader. I want the yield max funds to do well. I want them to do as well as everybody. Okay, so this one, we keep seeing the same names. Literally, the VTI has the same top holdings as the other one. So the only difference, I feel like there's a letter I in the ticker. But like they say, there's no I in team. So, investing is like a team of funds. It's kind of a team effort in a way. Don't know why I needed to throw that in there, but just it sounded funny. It sounded like something that was worth saying. The expense ratio is 0.03, very low. Beta, not too risky. Yield, 1.42%. Okay, so there's those. Let's see what other ones I might want to cover here. Let's look at, so I like to spice things up. I'm going to look at some triple levered funds. Oh, and the person that had asked me for this pointed out something about going with Moat over the SPY. I spy a reason for that. It's because 95% of Moat holding in SPY, while only 9.4% of SPY is in Moat. Okay, interesting. Well, that's an interesting take. Okay, let's see. What's RSPN? I know what ESPN is, but not. Let's see. Let me see if this is I've never heard of this one. Usually I just assume if I've never heard of something, I just assume it can't be any good. Like if I've never heard of it, it can't be any good. That's a joke, of course, but you'd be surprised how many people actually say that. It's scary. Like you can mention something and they'll say, well, I've never heard of that. It can't be good. If I haven't heard of it, it can't be good. You know, logic or lack thereof. Okay, RSPN, here we go. This is the Invesco S&P 500 Equal Weight Industries. Right in line with NAV again. Yield 1.07%. Expense ratio 0.4. This one since 06. We've, we're seeing the same thing with these. You could literally like draw like a line. There's literally no like fluctuation long term. This is like what I would call stress-free investing. It's like you're on autopilot. You don't even need to like worry about it. So $10.13 here. You see where we are today, 44.30. And so yeah, those are some good ideas for exposure to all the sectors. I just want to check Russell 2000 play here that I actually did this TNA. This is a triple levered one. We're up to $36 here because I get stubborn. Like I was looking at the UPRO one, but I feel like the S&P is about to hit 5,000. I don't feel like it is. It did today actually, but I feel like when indexes hit all-time highs, I feel like, well, how much meat is left on the bone? Do I want to like put my contribution for the year into this, all into this? I mean, because who knows what is it going to like do another 40% up? I mean, we never know. It's like it's the psychology of investing. You think that, okay, it had a 40% year last year. Can it replicate that? Anyway, long story short, I didn't put more into the UPRO, so I decided to play the Russell 2000 this year, which, by the way, and some of my regular viewers, you could probably finish my sentence, but the Russell 2000 is currently not trading at 2000, but we should get there very soon, I would think. We have been there like a couple weeks ago, and I think we'll get back there very soon. So, and you know what? We could actually call the S&P 500 S&P 5000 because it's hit 5,000 today, even though it is the 500 largest companies in the U.S. Okay, TNA, 35.86, up $1.55. The only thing is with these triple levered ones is when the Russell 2000 plummets, it looks like TNT gets. It looks like TNT was applied to the returns on funds like this one because it will drop by 3x. It will 3x to the upside and 3x to the downside as well. So since there we go, since 08, we've done pretty well in this one. We've been as high as almost $100 a share. So when the Russell has big run-ups, you can have big run-ups in this too. You can literally, like I said, 3x either way, but you want to do it to the upside. So with that those were some growth index funds there, which I really believe is the safest way to go. Now let's do some comments here. Okay, so first comment, we've got Blake on. He says, I believe that people should invest into growth while they are young and working and switch to dividends when they retire. Oh, you don't think the opposite? You don't think we should like risk everything when we're younger and then be more conservative when we're older? Kian Shi is on. Regarding the YieldMax management fee, I have a question about the 0.99% management fee. Is that 0.99% of NAV, but NAV changes daily? That's actually a really good question. I think Blake answered it for you, but I would say, we're just supposed to think that, 0.99 is too low. We're supposed to be, upset about that and say, or not upset, but think that it should be even higher. And I just say that because, I've had people that are like, oh, you have a problem with the 1.29%, which is higher for, YMAX and YMAG. Anyway, open-ended funds have to stay in line with their NAV. Only closed-ended funds are allowed to deviate. There you go. There's your answer there. This is because cross-asset algos will arbitrage the difference away. Wow, I did not know that. Blake knows a lot of things that I don't know, or that I may sometimes pretend to know. But anyway, I guess, looking at the 1.29, it's a higher fee for more work, I guess, for the YMAX and the YMAG. But you know what? So I didn't talk too much about YieldMax in this one. We pretty much talk about that in like 90% of the videos on here. So we will get into, I want to talk about in my next video, YMAX and YMAG, the different schedule that they're on. So stay tuned for that. Hopefully this opens you all's eyes a little bit on some alternatives to YieldMax with, index investing. Obviously, I think index investing is the way to go. And yeah, so thank you all for tuning in. Like, comment, and subscribe, and we will see you all very soon. Oh, look who's on, the guy that asked for a lot of these funds. I would have done that video this afternoon, by the way, but I was kind of waiting on your response, because on Discord I've got to scroll up and try to find all this chat history, and I'm like, oh, well, you know, what were the funds again? But anyway, we covered it. So anyway, all right, thank you all for tuning in. Like, comment, and subscribe. We'll see you all very soon. Take care and have a good one.